Well, wherever you are, good afternoon, or good morning, or good evening. But welcome everyone to MOX 12 Demo Day. My name is TR Harrington, and I am the co-program director at MOX, and I will be your host today. We are very excited to share with you our latest batch of 13 global startups. The MOX 12 batch includes startups from Indonesia, Singapore, Malaysia, India, Pakistan, and we expand our frontiers with our first investments in startups from Cambodia, Kenya, and Nigeria. Many of our founders are serial entrepreneurs, including 5 founders with 7 prior exits. To date, these fast-growing startups accumulated more than $1 million in sales, with a few startups growing more than 30% month on month. Now to our agenda. To begin, our general partner, William Balbine, will share about our fund, SOSV, and the fast-growing cross-border ecosystem. And before we get to our startups, we will set up today's event with a live panel discussion between SOSV partner Oscar Ramos and our special VC guests. So, to kick things off, William Balbine will share a little bit about our fund at SOSV. Please help me welcome William.
Great, thanks so much. Wonderful. So thanks so much. I'm really pleased and proud to welcome you to this MOX Demo Day. So we are SOSV. We are a global VC firm that focuses on multiple different verticals. We've got Hacks for hardware, IndieBio for life sciences, D-Lab for blockchain and crypto. And you're here today with us with MOX, which focuses on consumer tech. We are global. We span the globe. We've got offices across Asia and US and Europe. Very happy to be opening up 2 new offices, brand spanking new this year, Hacks USA in Newark, New Jersey, as well as IndieBio New York. We've got an entire floor in 7 Penn Place in Midtown, and that'll be opening up this year as well. So we're a very active VC. We invest in companies, about 140 companies per year. That makes us in 2021 the #1 most active early stage investor in the world. And it's spread across the world, #5 in the US, #3 in Europe, and #4 in Asia and rest of world. We go deep with China Accelerator and MOX into Asia. So across East Asia, where again, we're #4, but also Southeast Asia, we're #9, India. We invested in there for the last 3.5 years pretty heavily. We're at #8, according to Tech in Asia. Singapore, very active there. And of course, in the last 1.5, 2 years, we started investing in Pakistan, where we're the 2nd most active VC, according to Magnet. Not only are we global, but we also go deep by verticals. So Hacks for hardware, well positioned there in robotics and IoT. IndieBio for biotech and synthetic biology. We're the most active investor in cellular agriculture in the world. And MIT ranked us the #1 in tough tech. Basically, we're also #1 in climate tech. So these are all areas that require long-term investment, deep commitment, and a real focus on deep tech and hard tech. For China Accelerator and MOX, we have a real heavy focus on artificial intelligence, using technology to change the world for the better. In terms of cross-border internet, it's easy, simple. MOX is consumer, and China Accelerator is enterprise. And we're helping companies from around the world expand to Asia, but we've gone beyond that. It's not just Asia. We went to Southeast Asia and now South Asia, but we're in Middle East, North Africa, Sub-Saharan Africa, and going into South America, Latin America. You're going to see some amazing companies from not just Asia, but across the world. We had a very good 2021. So overall, SOSV portfolio companies closed $2.2 billion in follow-on funding for just the 1 year. That's a record for us and a big step up. For China Accelerator MOX companies, we also had a record. We helped our companies close $265 million in follow-on funding just in 2021. And what really drives this, it comes down to traction. Through our program, we offer investment, sure, but what we really help with is mentorship and perks. The biggest one of those perks is from our mentors. We have over 500 mentors from around the world. They've failed at many things, but they've succeeded at least one. And they're bringing their in-depth experience, both by country, by geography, and by sector to our portfolio companies. So what does the program entail? We're a later stage program. All the companies that we work with generally have revenue before they come in, and we're a scale up and scale cross-border program. We help with sales, cross-border, and we're really focused on driving growth. TR, who introduced himself just earlier, he runs our growth team. We help with customer acquisition and partnerships. And we used to be an accelerator. It was a 3-month program, and I made it a 6-month program. But for the last 3 years, we've been a never-ending program. Therefore, we're technically no longer an accelerator. We have lifelong support. So the key for us is on the MOX side, on the consumer side, we do something that's really unique in the world, and that we give customer acquisition, free customer acquisition to our companies. Usually the problem is you're spending like a lot of money, $1 on Facebook or Google ads. And then, you're, especially in the early days, you're maybe lucky if you're making 20 cents or 50 cents. But what we do is we partner with some of the largest corporations around the world, and they're pretty sick of big internet. And what they want to do is they want to monetize not just from their core business, but also leverage internet business models. So we pair on the one side our corporate partners with our startups on the other side. In a relationship, a symbiotic relationship where the corporate partners give free advertising, free user introductions to their consumers. Those corporates get better engagement and they get revenue share, lifelong revenue share. And as a result, our startups get user acquisition. So 2019, we only had about 6 million monthly active users. 2020, we hit 50 million. And I'm very proud today to say that our companies, as of this week, hit 105 million monthly active users. And most of those users were at a customer acquisition cost of zero, of nothing. And so we borrowed this model from China, from companies like Xiaomi and from India, Reliance Jio. But now we're spreading this model across the world with our portfolio. So again, active, not just in China, but now we're very active in Southeast Asia. Then we went to India, now Pakistan, now North Africa and Sub-Saharan Africa, and soon South America and Latin America. As part of this effort, where we just announced a pre-accelerator program with our partners at SBK, a leading venture firm in Bangladesh, and Miyake. So what we're doing is we're going after early stage companies that follow the model, and we're bringing them up, helping them get that product market fit so that they're ready to scale both within Bangladesh as well as cross-border. So just usually we just sort of recap some of the earlier companies. We're going way back, almost 7 years to MOX Batch 1 in 2015 to TappyTune. Now, TappyTune is the world-leading digital-first webtoons and web novels platform. 7 years since we invested, they have 6 million active users, and they're the top 3 comics apps in the US by gross revenue. They're also the top 2 to 4 comics apps by gross revenue in 95 countries. And that's according to Google Play. So TappyTune recently closed a pre-IPO round, and hopefully we're getting ready for a listing there. And what really matters in this new Web3 era is the content, is the IP. And TappyTune is a leader in Korean webtoons and web novels, basically Korean comic books. And most people don't know that these Korean comic books actually drive a lot of the storylines and plot lines for Korean dramas. So if you like Korean dramas, check out Korean webtoons, Korean comic books, because that's where the stories come from. The second company I'd like to share is a more recent addition to the portfolio of Voila. And we've talked a little bit about them before, but they bring China social commerce AI, social commerce technology from China to the US and beyond, to the Instagrammers and TikTokers. These Instagrammers and TikTokers, you know, they want to make money. They want to make money through e-commerce, but they can't because the social platforms bar them from making money on e-commerce. So Voila breaks down that barrier and helps these creators, these influencers, make money on their hard work. So far, Voila is working with active 15,000 influencers and celebrities whose storefronts are attracting 3.2 million uniques a month and who match over 3 million different products from 16,000 different brands using AI with the consumers. So you go in, you don't just see what the influencer is sharing, but you see 6 other products chosen by Voilà's AI. And the amazing thing is that Voila drives an average of 800% increase in conversion to purchase from those 3.2 million visitors. So happy to announce that just recently, a couple of weeks ago, Voila closed a $6 million Series A, led by Sinovation Ventures, who's very well known for investing in leading AI companies. And of course, SOSV was there to follow. And then last but not least, is Market Force. If you guys, you probably, hopefully remember Market Force from Demo Day just 2 months ago or 3 months ago. But they're the leading retail B2B end-to-end distribution platform for mom and pop shops. They're digitizing mom and pop shops across sub-Saharan Africa. Okay, and over the last year, they went from 5,000 retailers to over 100,000 retailers active on the program. And since we just invested this summer, they went from 500,000 in gross transaction volume to 6.5 million in monthly gross transaction volume. And that's all in US dollars. So today, very happy that they announced they closed Series A just 2 months after Demo Day. They closed a $40 million Series A, 20 million equity, 20 million debt to help them continue their expansion across sub-Saharan Africa and beyond. So that's a quick update from us. Love to stay in touch. You can find us on WeChat or LinkedIn or Facebook or Insta or other platforms. And with that, I am going to kick it back to TR. Thank you very much.
All right. Thank you so much, William, for that quick update on some of SOSV and our portfolios. And next up, SOSV's Oscar Ramos will host a VC panel discussion. And to introduce his panel, please help me welcome Oscar.
You guys. Thank you, TR and William, for the introduction, and let's kick it up with this with the panel. So I'll start introducing the different participants that are going to be joining in this panel. I'll follow the order that we have in the slide. So first, here in Shanghai, I'd like to welcome Sophie Yao. Please, big applause for Sophie Yao, Managing Director of Pegasus Tech Ventures China. They have $2 billion under management, and they invest globally, investing in China, mostly in pre-IPO companies, and then in Southeast Asia. They're investing in companies in seed, Series A stage, looking at $3 to $10 million investment. After that, I'd like to welcome Avni Jain, connecting from India. Hello, Avni. Please, big applause for Avni. Avni is a senior associate at Chirate Ventures. Chirate has over $1 billion under management, and they're investing in seed stage between $500,000 to $1.5 million, as well as in Series A between $2 to $5 million, mostly in tech-driven companies that have a connection with India. Okay, big applause. And after that, we have Julian Minaret. Please, big applause for Julian. Operating partner of the Eurazeo, where they have over 30 billion euro under management. And Julian is working mostly in the early and growth stage companies in China and Southeast Asia, looking at investing mostly in the smart city space. Okay. And last but not least, also residential here in Shanghai. Please give applause for Joe Chang. Joe is a veteran in the VC space that has actually participated in the past in some of these VC panels, but now he's here in his new role as managing director of Saudi Aramco Prosperity 7 Ventures. Is a new new $1 billion fund where Saudi Aramco is investing across different areas where they can leverage some of their portfolio of assets. And with that, and knowing that we have 4 panelists, a lot of stuff to share, I'm going to go straight to the questions. Okay, we're going to be looking at cases. We're going to be looking at some of the latest investments that these investors are making right now, so they can share with us what was exciting about these companies for them. So because Joe, you were the last one next to me, so I'm gonna kick it back to you. So Joe, what was the latest investment that you can publicly announce or talk about it? Let us know a bit about the company and why you were excited about the industry and about the company.
Okay. Well, the last investment that we just closed 2 weeks ago, I cannot publicly announce the name, but I'm happy to share a bit about it. This company is behind the world's leading vector database, which is what people can use to search for unstructured data, right? So this is anything from images to video to formulations, whatever, anything that's just not in a file-based, text-based system. So the reason this company is interesting to us is that around this engine, they're actually building an unstructured data cloud, right, platform. And so those of you who are familiar with the likes of Databricks or Snowflake, and you think about all the value that they're creating for enterprises in terms of the analytical insight that they can enable, that's in the structured data world, right? That everyone is familiar with. Now, if you think about unstructured data, you're talking about 5 times the data volume is structured data. And if you can think about sort of all the insight that you can potentially extract from that in ways that you couldn't have imagined, let's say 10 years ago, what you couldn't imagine you could have gotten out of structured data, that's the potential behind this thing. And so we're excited because of the new possibilities that can afford enterprises, because of all the things that Aramco is trying to do to help develop Saudi Aramco using AI, using IoT, using all sorts of things that are using unstructured data. And also, because first and foremost, we're a financial returns-based firm, with Databricks at 40 billion, Snowflake at 80 billion. If this is 5 times the data volume, who knows what the ceiling is.
Good. So we're going to continue seeing a lot of investments in the infrastructure space. I mean, AI, data science, a big thing, but of course, all these bases are quite important. Okay, let's bring now one of the panelists, and let's invite one of the panelists that are online. So, Avni, would you like to share one of your latest investments and why are you excited about this company and the specific industry?
Sure. So this is actually an investment that's actually ongoing right now. We will be doing the closing in the next 2 weeks. It's in the space of autonomous mobility. And I think what excites us about the space is that the opportunity is tremendous. It's going to usher in a whole new era of mobility, right? Because if you just look at the market today on shared mobility with just less than a 1% penetration across the globe is at $6 trillion, right? And it's expected to grow at a 20% CAGR over the next 5 to 7 years. So the market opportunity is humongous. And I think just the problem that autonomous mobility solves around safety and convenience are 2 big drivers for its adoption. Particularly the company that we are looking at, why we are interested in them, is because of the very novel approach that they're working on. So they've identified this new technology, which they term as nature-inspired AI, where they basically mimic the 3 key pillars of autonomous mobility, which is around perception, localization, and motion planning, with the algorithms mimicking how a human would respond to traffic conditions. And because of that, they're actually able to achieve 3 key things. One, they're able to achieve 1/6 the data requirement to be able to train their models. Two, the capex is 25 to 50% lesser at the initial cost of purchasing the vehicle. And three, they're able to make this work in unstructured environments like those available in emerging markets, which is why this is an extremely exciting space for us. The team is extremely energetic, very young individuals, and they have a very interesting vision, especially with the way they are going about addressing this problem, right? There are the giants in the world who are trying to do this, but they have an extremely different way, and which is quite novel to attack a problem which is so complex. And I think that's why we're extremely excited and backing them.
Thank you, Evni. Well, as you can see, like investors are very active, and they're always also very excited about the new things. So all of them are disclosing investments that are not announced, or talking about investments that are not announced, or they're not even close. Okay, good. Let's bring the question back to the room. So, Sophie, can you share with us one of the latest investments that you think is particularly interesting?
Yes. So we have invested a very interesting company, which is in sustainability, especially in food. So when talking about vegetarian, for example, like the technologies, everybody think about, for example, like Beyond Meat or the vegetarian meat, something like that. But for me as a Chinese, when I look at this portfolio, even our HQ has invested some of the vegetarian meat portfolio. But as a Chinese, when I look at that, I think that is like 100 or 1,000 years ago in the Buddha, in the temple, that everybody cooks using the potatoes to be the meat and using for example, like tofu to be the meat. So it seems like a fake need for me. But when I look at these companies, actually caught my eyes. So this company is doing the bio-design colligans. So, vegetarian is not limited to, for them eat, but also they are using, for example, like makeups and also drink some of the colligans. But for now, most of the colligans are coming from the animals. So this company has caught my eyes because it's from laboratory. So they use a bio design and also the fermentation process to create animal-free colligans, which can be used in your cosmetics, and it can be used in beverage, and it can be used in food. And now this company is actually working with LG Group. So it's called Jota. So this company has working with LG Group and also other, for example, like Shiseido's and these companies to create, for example, like makeups and also cosmetics for girls and vegetarians. So I think that will be a great need, because when we look at the collagen market, it's $7 billion market. And also this world got billions of vegetarians. So that's why we invest in companies.
Thank you, Sophie. We've covered data infrastructure and data science, mobility, food. Let's see what industry can Julian surprise us with. Julian, would you like to share one of the latest investments that you made, and what were you interested in that one?
Sure, sure, Oscar. So no surprises on my side, because one, it's a disclosed investment. I made it last year, and it's actually my latest investment because I've been fundraising for the team. We've made more recent investments, but personally. And the other, it's also in the mobility space, like OVNIs. So last investment is a Chinese company called Yihuandian E-Motor, and it's around battery swapping for delivery services, EV scooters in cities. And so what we're excited about here is, again, Eurasio is, we're present in 10 countries, and one of the things we're excited about is bringing best services or best-in-class technologies to areas where they're not. And specifically, company we invested in, E-Motor, has developed the battery swapping services in China, is now present in 50 cities, over 10,000 swapping points. And we want to leverage that to bring it to Southeast Asia. So I've helped the company close a new round to bring it to Thailand, to bring it to Malaysia, hopefully to Indonesia. And we're not the only ones. The category leader, Gogoro, has also announced developments in India, developments in Indonesia. And so what we're excited about here is, again, the idea that we can leverage cross-border capabilities to change outcomes in decarbonation and decarbonated mobility. There's a massive, with COVID, there's a massive use case for using EV scooters for deliveries of obviously ballooned in all of the urban centers in Asia and across the world. But what's exciting about that is China's brought the right economics, the right price point. It's produced at scale, mass produced, over a huge user base. 150,000 users in China alone monthly. Bringing that to Southeast Asia is going to be a massive hit. And beyond that, we just feel that if we don't do this on our side, if we don't push these kinds of companies, it's going to take a few years in ASEAN to develop as a homegrown solution, because we are also interested in investing in Southeast Asia. We do, but we know there's certain categories where it's more capital intensive, or it can take more time, or the economics and scale won't be there. So that's what we're excited about. At the Smart City Fund, obviously it's a theme that we're very focused on, mobility. And today I'm in Paris actually, and I'm just really just amazed at how deep the last mile mobility segmentation can be. I mean, if I walk out the door in Paris, I have electric scooters, multiple brands. I can have a shared bike on a fixed bike station. I can rent a micro car. I can take, I mean, it's just unbelievable how many options I have here. But in Southeast Asia, we still lack these options, and in many other parts of Asia, actually. So that's what I'm still excited about. In terms of tech, obviously it's very straightforward, but one of the unique features of battery swapping is that batteries are actually recycled. They don't end up in landfills. The provider has an obligation to collect them. And lastly, it's safer. People don't charge in their buildings. It's not at the 18th floor that you're charging your electric scooter. You're swapping on a publicly available station. So it has many features of benefits that we like.
Thank you, Julian. I'm gonna walk the reverse order that we use for the questions to ask the next question to all of you, and maybe it's a good point. It's a good continuation of what you were sharing, Julian. So you guys have just shared like what is your latest investment and why you were interested. Now we want to look a bit more ahead into the future. So startups are looking into the future. VCs need to be looking into the future of the future, because otherwise we're too late by the time we're looking at some of these some of these companies. And one proof of that, we mentioned two companies in mobility, and today we're going to have also some companies talking in mobility. We mentioned sustainability. We're going to be talking today about companies that are in sustainability space, and obviously data and data science is everywhere. No? So that's something that you also will see. There's a lot of companies that today are using any type of machine learning or data science to improve. So Julian, what do you think is the most exciting industry? What do you think is the next trend that is going to be more relevant during this year? And is there any company that you like to quote, either a company from your portfolio or a company that or a specific type of model that you think is exciting?
Yeah, sure. It's again, maybe not something overwhelming again, but I'm just fascinated to see how embedded finance is taking a grip in pretty much all of the industries that we're present in at Eurazeo. I mean, as you mentioned in the beginning, we manage 30 billion euros across different strategies, including VC. And in VC, we have multiple teams, right? But in every team, and we're talking about healthcare, smart cities, obviously, and sustainability, the general consumer, everyone is now embedding finance in their offering. And that's completely changing the nature of companies that we're looking at. In Europe, to give you an example, 5-10 years ago, we looked at everything around access to purchasing of homes, right? So your typical platforms where you'll just find your next apartment. Today in Southeast Asia, similar companies, and we actually just invested in one, is not just offering you, access to a platform, a marketplace, but has built the whole vertical chain for you to acquire that good. And it's something that we tried to do in Europe many years ago, we just couldn't. And now with the simplicity of embedding any type of transaction into a service, whether it's purchasing an apartment, finding the financing for it, et cetera, it's just becoming so much easier. And that is interesting for pretty much all of our companies that we're supporting, all the new ones that we're looking at, all the corporations that are behind our fund as well, is just becoming so seamless and easy that it's revolutionizing many of the plays that we were looking at.
Yeah, definitely. I mean, I'm not sure how far can fintech keep growing, but last year we had almost a quarter of the whole venture capital deployed into fintech. So we're definitely going to see a lot of interesting stuff happening in that industry. Sophie, what are the areas that you're seeing most exciting? What are the areas that you are right now exploring as where you think you're going to be able to find your next best investment?
So I think this question can be divided into different area, because when I look at global deals, right? So for example, in America, I definitely say that the quantum computing and also, some of the space technologies, is like it's very excited when I look at it. But for example, like in Southeast Asia, because it do not have the solid technology base. So in Southeast Asia, I can see the booming of the agriculture technologies and also e-commerce, fintech. Yeah, but inside China, it's also interesting. In China, I see several very interesting criteria, for example, like UAM. So urban air mobility. So now it has been caught the eyes of the public is because the XPeng has built a flying car. Yeah. And also we are looking for the UAM deals inside China, because like back to 4 years ago, when we're looking at UAM inside US, and Joby now is going to IPO. So I think UAM in the China now can be a booming market, because China has a lot of, for example, like sub towns. So this UAM solutions can be a solutions for the mobility, for example, like flying from Shanghai to maybe Zhejiang just in 10 minutes. So it can be a very large market. Yeah.
So we see mobility going to new frontiers, and now we're going to have like a flying cars as the next thing for the year. That sounds quite interesting. Avni, getting back to you, what are the things that you're seeing as the most exciting right now?
Yeah, so I think I share Julian's thoughts. I think especially in India, if you were to see the revolution around electric vehicles and their use case and usability being driven through different types of mobility use cases, I think we see that the whole ecosystem build out to be able to support that is going to be a big is going to be a big trend for the next 3-4 years. When I say ecosystem build out, so battery swapping is one of the things that can enable this and enable faster penetration of a technology like this. But in addition to that, having the financial services layer, which is around providing the lending and the funding, as well as the insurance to do this, is also going to be quite critical in building this whole market up. And clearly, this is the way to go for the future. So I think that's one area we are quite excited by. Secondly, if I look at a more global trend, I think, just given how connectivity has become a bare necessity, right, to be able to manage things intelligently and to be able to do it through software and not human, this whole concept of IoTization as a service, right, wherein you are kind of bundling the hardware capability of a chip to be able to make the device or the machinery intelligent. In addition to that, add on top of it the connectivity layer as well as the data management layer. I think that is one very interesting area that we are quite excited about, especially with its applications in areas like, not just sustainability, but also mobility, smart cities, and things like that. It has a very massive global potential. And as of now, we are looking at this one very interesting company, which is, based in India, but building for the globe. Who are doing this, and the solution that they are building is just tremendous, right? Because it's the first in the industry in a way where they've been able to kind of SaaSify all of this and make it as a subscription, bundle all the 3 verticals to make it a service, and they are providing it at price points which is 1/6 of what any competitor, established competitor in the market can do it at, while still meeting the quality standards. So I think that's one other area where we are quite excited, and we see a lot of other companies coming up in this area.
Thank you, Avni. And now back to the room again in Shanghai.
Sure.
Joe?
I think this is such a hard question because there's just so much out there that's potentially interesting and exciting. Prosperity 7 was set up really to help transform Aramco and also the Kingdom of Saudi Arabia. Move away from oil and gas into the next 10 years, where we're going to be. So we're even building a $500 billion smart city called NEOM, which is really what we envision the future to be. So anything that's going to enable that future to happen, to supplement or even replace human beings in various facets, everything from robotics to AI, automation, all very interesting, and all the underlying technologies. I think, though, if you force me to pick one thing that I think will have, just profound impact on probably everyone in this room, no matter what you're doing, it is the blockchain. Okay, and I don't want to sound like one of those crazy people who, talk about blockchain. And I never understood it until this past year, when we actually made an investment, got to know and understand it. Never really understood, okay, why guys like Tim Draper, Mark Andreessen sort of, want to go all in, on the blockchain craze. And when I talk about blockchain, I don't mean crypto, okay? And there's going to be a lot of guys, SOSV included, investing in things like BitMEX. There's going to be money being made there, right? And personally, I do some things on the side. But when I talk about blockchain, I'm not talking about, Bitcoin. I'm not talking about, B2B. I'm talking about the technology, right? And what the technology really enables is for multiple people, right? Or even 2 people, 3 people to have a single source of truth, right? That doesn't really need verification by any sort of third parties. And if you think about that, that's a really profound innovation, because, if you think about 4,000, 5,000 years ago, if we were doing trade, okay, you have an apple, I have a pear. The only way we sort of did trade was, you took my, apple, I took your pear, right? But what if I don't want your pear? Okay, so then there was a new innovation called money, right? Called currency, and an innovation called banking that came about with it. And that was a huge innovation that unleashed a period of massive value creation for the last, few thousand years, to the point where today, along with this is not just an innovation, but a huge cost, right? So the cost of making all this happen, all the value that was created, is this massive service industry that we have today, which is the finance industry, the banks, right? Who have to, they have to verify that this currency has money. They keep the logs, they keep the ledgers. You need lawyers, okay, who draft contracts, right? You have accountants who have to go and audit and make sure this is that, okay? Now, what if you had a technology that enabled you to do these transactions without having to have any of those third parties, or at least reducing them, in a significant amount, right? So that's something that, I feel that over the next, 10 years, okay, you're going to see as much impact on blockchain if you're doing anything that's related to transactions, right? Finance, commerce, anything where you're, going between one party versus another. I think that's probably 99% of, all the startups out there, right? This will become as ubiquitous as the internet, okay? Because this is going to be the way that you can do things faster, do things much cheaper, do things much safer, okay? And it will be very, very disruptive. And so, when I was at Fidelity, I was co-leading the technology fund for 8 Roads. Abby Johnson saw this as the biggest, disruption to the entire finance industry. And so if you, talking a little bit here, I'm going to move to the company. We invested in a company last year called Red Day, okay, which is the architect and operator of something called the Blockchain Services Network. And in short, what it is basically an AWS for blockchain, okay, enterprise blockchain. So what they're doing is they're enabling developers to build blockchains very easily, right, without having a huge level of skill, just like AWS did. They're saying you focus on your core application, all the stuff you need to do a blockchain, third-party services as well, not just things like security and ELT, but things like bank transfer, KYC. Get that here, make it easy, right? And we invested in this company. Took us 6 months because we really, weren't sure. We kicked it under a hood. But the reason we invested in it wasn't just the bold vision that it, created, but frankly, we invested because China is behind it. Okay, and something of this nature, the internet took 20, 30 years for it to go from innovation to actually landing and influencing and becoming a part of, commerce. Invented in the 60s or 70s, depending on how you look at it, the 90s, right? Until people actually started using it. And it wasn't until AWS came about that it really took off with the SaaS applications. And that was because before it was too hard. It would cost too much, and there were interoperability issues. And that's what Red Date is solving. But more importantly, instead of 20 or 30 years, right? If this was a startup that was just trying to, do it on its own, we would not have invested. But we invested because like the Gaotia, right? Like the high-speed rail, China's basically deciding we're going to build it, okay? And so this thing is getting deployed. Many people don't know across China right now. People read about China banning crypto. Yeah, they're banning crypto, but they love blockchain, okay? And they are going to use blockchain to run the economy. We are interested because we want to, realize all the benefits of blockchain that China wants to realize, right? In terms of unleashing the economic potential, right? If you think about what this does, levels the playing field between developing countries and developed countries, because you're taking away the developed countries' reliance on their financial systems. You're enabling banking the unbanked, for instance. The other part of this is that, China is our biggest customer, right? So anything that's going to enable us to do trades with China much faster, much quicker, much cheaper, and not having to go through the Swiss system, that's going to be of interest to us, right? So sorry, I probably took way more of my time, but as you can see, it's something that I'm pretty excited
I can
about.
see that you're very, very excited. Just for the record, I mean, we do invest in crypto companies, but there's also a significant number of companies in our portfolio that are just blockchain companies, both in the core technology as well as companies that are leveraging the blockchain technology. And it's a pity because as you were all guys talking, it's like, well, I know there's going to be a lot of SOSV companies that are going to be pitching today, so it's not the space for me to come and pitch our own companies. But there were some cases that were good examples of almost all the trends that were discussed today. So with that, please, I'd like to a big applause for our panelists today. Thank you very much for sharing your investment, your vision. And with that, I'm gonna kick it back to TR. That's gonna be now or MC for the night. That's gonna be kicking off the MOX 12 demo day. Looking forward to see the companies.
Okay. Thank you, Oscar, and to our VC panel guests. Yep, perfect. And it is time to meet our startups. So while our first startup gets their slides ready, let me remind our Zoom audience and investors briefly about our demo day format. At the end of each startup founder's presentation, investors on Zoom will see a poll regarding their interest in a follow-up. Please take a few seconds to reply. Thank you. Okay. Now, with that being said, the time has come for our startup pitches. So, for our first startup at MOX 12 Demo Day, please help me welcome Treeps.
This is the story of Onyeka. He's a young entrepreneur building his startup in Lagos, one of the busiest cities in the world with over 20 million people. Lagos has a very hectic transportation system, and you can see this through this. Yet Onyeka does an average of 3 meetings every day with customers. And to make sure he gets to his meetings in time, Onyeka wakes up every morning by 4 a.m. to catch the bus. When he arrives at the bus stop at 5 a.m., there's no guarantee that he will get on a bus. This is because there are over 80 people at the bus stop waiting for a single bus with 20 seats. When the bus arrives 30 minutes later, everyone struggles to get in. Onyeka makes it on the bus, but he has to stand for 2 hours because there are no available seats. He repeats this process twice every day from meeting to meeting, and it's frustrating. Onyeka spends an average of 6 hours in the morning stuck in traffic, and at the end of the day, he will spend another 3 to 4 hours getting home from work. He has to deal with this painful situation every single day of the week, and he's not alone. There are over 9 million people in Lagos that depend on the bus system every day, enduring the lack of safety, the lack of comfort, and most of all, not being able to predict whether they'll be able to get on a bus. My name is Onyeka, and this was my story a few years ago before I launched Trips, to change the way Africans commute on a daily basis. Trips is a shared mobility startup that uses technology to connect millions of Africans to predictable travel times, safer travel, and comfortable transportation services using buses. With an estimated market of over $2.8 billion generated monthly from buses, TRIPS has a huge opportunity in Africa with over 600 million passengers using a bus every month. In the 3 countries we have launched, TRIPS has a first mover advantage and an addressable market of over 250 million passengers. We have built the largest network of bus operators in Africa who fully integrate their bus seat inventory on the TRIPS platform in order to attract thousands of new customers. So let me show you how it works. Our users begin by downloading the TRIPS app. Then they register their details. And now they can start their first trip in 3 quick steps. Step 1, they select the pick-up and drop-off bus stops. Then TRIPS shows the user bus options with different travel times. Step 2, the user selects a preferred bus based on its distance from them. And then step 3, they book their trip. As the bus approaches the bus stop, TRIPS notifies the user of the bus on its way. So when it arrives, the user gets on board and scans their QR code to check in comfortably. That's it. 3 steps and they're moving. To succeed on this journey, we've assembled the best team with domain expertise to build our vision across Africa. My co-founders include Afolabi, who built the first online car rental platform with over 2,000 users in Nigeria before joining TRIPS to lead operations and projects. Shaibu and Johnny bring in a combined 30 years experience of managing e-business and customer engagement across leading banks and travel agencies on the continent. Johnny specifically was responsible for launching the first automated teller machine in 2002 for a bank in Nigeria, along with the first airline e-ticketing portal for aero contractors in 2003. These businesses currently turn over an average of $5 million monthly. And as for me, I have built 4 startups and exited 2 already, including a media company and a fintech startup. I was also employee number 1 and led marketing for an e-commerce platform called Jumia, Africa's first unicorn and now listed on the New York Stock Exchange. I helped Jumia to launch in their first market and recruited the first 20 team members. Today, it's a household name. Along with my team at TRIPS, we bring our experience together to make our model work. And you can see this through the traction we've had in the last couple of months. Since the launch of our service, we have completed over 800,000 rides. Today, we have the largest network of bus operators in Nigeria with over 2,000 buses already signed up. In Uganda, we have 70% of all bus operators signed up on the TRIPS platform. This gives us access to more than 2 million passengers in Uganda alone. And in Ghana, we're signing up the state-owned bus service to power their transportation network with TRIPS technology. In the last month alone, 120,000 passengers use TRIPS technology in the 3 countries we operate in. These customers currently generate over $100,000 in monthly revenue for us. We're creating the African champion for bus transportation, powered by technology for millions of commuters. This year, we plan to expand into 5 additional African countries, including Ethiopia, Togo, Benin, Tanzania, and Zambia.
Okay. All right, thank you again, Onyeka and TRIPS. Please help me welcome our next startup from MOX 12, Lipa Later.
Meet Kamal. Kamal lives in Nairobi, Kenya's capital city. Kamal has a family of 6. He has a wife and he also has 4 children. Kamal is also a middle-class Kenyan and he's a civil servant. He's also the breadwinner and he pays school fees for all of his children. His oldest daughter, Lisa, is finally joining the university. And now as she joins the university, she urgently needs a laptop. Now, the average cost of a relatively good laptop is approximately $400. With Kamal's tight finances, Kamal simply cannot afford to pay for this laptop upfront. Now, without the laptop, Lisa will miss her first semester and hence her entire school year. This is exactly where Lipa Later comes in. Lipa Later is a buy now, pay later solution that allows consumers to buy goods and services and pay for them in flexible and affordable monthly installments. With Lipa Later, Kamal will be able to purchase the laptop today and pay for it over 12 months. His monthly installment will be approximately $50 per month. A $50 per month payment significantly reduces the financial burden of Kamal and his entire family. Now, this is an example of how Lipa Later actually works. Our lending process is fast, it's easy, and it works in 3 easy steps. Kamal can pay a visit to any one of Lipa Later's merchant stores, either online or offline. What you're seeing here is an online purchasing process from the Lipa Later marketplace, where customers can choose products from a variety of merchants. Here, Kamal is spoiled for choice and chooses the laptop that he wants from a variety of options available. At checkout, he chooses Lipa Later as his preferred payment option, and this will allow him to get the laptop today and pay for it later. He goes through a credit verification process where he inputs his details for the KYC process and goes through an algorithmic underwriting process. With this information, our system scores him and he gets an instant credit limit. He's then able to complete the transaction and have the item delivered directly to his doorstep. Kamal and Lisa happily get the laptop, and Kamal will pay for it in flexible monthly installments. Lisa will realize her dreams of joining the university, and Kamal's finances will not be unnecessarily strained. On the other hand, merchants also benefit from our buy now, pay later offering, and on average increase their sales by approximately 30%. Now, here's what makes Lipa Later stand out. We finance a wide range of merchants, ranging from device financing to fashion to automobile accessories. Our wide merchant categories allows us to offer an incredible variety to our customers, and it also sets us aside from our competition. In addition to this, the fact that we're operating in multiple jurisdictions significantly distinguishes us from our competitors that are still single market entities. Furthermore, we have a superior tech stack. Our superior tech stack allows us to be the first of its kind platform on the African continent that seamlessly integrates into merchants both online and offline. Now, we offer instant credit limits to customers and instant payments to merchants. We do all of this while maintaining a default rate of approximately 5%. Our interest rates are also the most competitive in the market, with our pricing ranging from as low as 0% up to about 4%. Our installment plans are the most flexible installment plans in the entire market, ranging from as short as 3 months up to as long as 12 months. And this allows our customers to pay for items in the most flexible way possible. We have the ability to establish in new markets extremely fast. We've been able to penetrate in new markets such as Uganda, Rwanda, Nigeria, which in total have a population of close to about 521 million people. And we've been able to do this all ahead of big competition. Our team is actually led by myself and my co-founder, Michael. As a serial entrepreneur, I've had the pleasure of being featured on the Forbes Under 30 list for the work we're doing here at Lipa Later. Michael, my co-founder, has a background in finance and legal expertise, and is also a fellow of the Alibaba eFounders program, which is a program for high-performing entrepreneurs on the continent. Our venture is also featured by the London Stock Exchange Group as one of Africa's most inspiring companies. Now, as part of this round of funding, we're on track to onboard a superstar team that will build Lipa Later into the unicorn that it actually is. To date, we're partnered with over 600 merchants. Our merchants range from the world-renowned retailers such as Carrefour, Samsung, Apple, all the way down to small mom and pop shops on the side of the road. Our team has put together a pipeline of over $400 million per annum. We have served over 200,000 consumers across our 4 markets, which are Kenya, Rwanda, Uganda, and Nigeria. And since January 2021, our signups have grown 244% to date, and are on track to be at 1 million customers served within the next 10 to 12 months. So far, we've disbursed about $6 million in facilities, and our disbursements have grown up over 493% from January 2021 to January 2022, and we're on track to disburse another $20 million this year.
Thank you again, Lipaleta. For our next MOX 12 startup, please help me welcome to the stage, Badili.
Okay, thanks, JR. Hi, everybody. My name is Rishabh, and today I'm here to tell you a story. A story of my good friend, Ronald. Now, Ronald is a 24-year-old creative professional. He's a graphics designer. He lives in Nairobi, the capital city of the East African country, Kenya. Today, Ronald earns roughly $250. That's not a lot, but he's aspirational like all Africans. At the moment, he has a $50 feature phone, but he really wants an iPhone 10. Now, sadly for my friend Ronald, a new iPhone 10 costs $500 and he cannot afford it. So Ronald decides to visit a gray market and buys an iPhone 10, a used iPhone 10 at a cheaper price. Now he's excited, he's used the phone for a few days, but then he gets a call from the police. Police tells him that the phone he bought was actually stolen and now he has to give it back. Sadly for Ronald, he loses his phone and his hard-earned money. There are millions of people like Ronald in Africa who get into financial and even legal trouble for buying used, stolen, fake, and counterfeit phones. Now, people in China or in India or in the US do not have this problem, but it's a big problem in the African market. Now, let's talk about Africa. Africa is the world's fastest growing smartphone market. In 2019, almost 300 million new phones were sold. But imagine all of them through organized channels. The same year, 80 million used phones were sold, but all via the gray market. The opportunity for refurbished second smartphones in Africa is huge, and somebody had to organize it. Now, let me introduce to you Badili. We're a platform that buys, refurbishes, and resells secondhand smartphones in Africa. Let me show you how it works. To start, we buy phones from our retail partners. What happens is people visit the stores, they want to sell their old phone and they buy a new one. So we trade in, we buy the old phone from the retailer. We also give people the option to sell their phone directly to our website. You come to our website, answer a few questions about your phone, about the condition, about the accessories that you might have, and our algorithm gives the price you're willing to pay for the phone. Next, we hook up the phone to our diagnostic software to check for any problems. We then repair, refurbish, and polish the phone. But we end by installing some really useful apps for the new owner, on which we get a revenue share. The market of 80 million units per year is what refurbished market looks like in Africa, and it's growing super fast year over year. Badili is positioned to organize and bring credibility to this market. So how we have differentiated is with our 6 months guarantee. All of our phones are as good as new, and they're actually half the price of a new phone. And with the authenticity of these refurbished smartphones, it creates the trust for the consumers. My name is Rishabh, and I'm the co-founder and CEO. I've been doing tech startups in Asia and Africa for the last 7 years. I've had one exit in China and one in Africa. My co-founder, Keshu, has over 18 years of experience in building products, and he's the one behind the Badili algorithm. Now let's talk about some traction. We signed as the official smartphone buyback partner for the largest brands, Apple and Samsung in Kenya. Every week, over 200 people apply to sell us their phones through our platform and the retail partners. And within just 30 days of our launch, we've sold over $40,000 for Badili smartphones. We've gotten the bookings.
Great. Thank you again, Badili. Next up, please help me welcome to the stage our next startup from MOX 12, Octopus.
Hi, everyone. I want you to meet Eddie. Eddie is a trash picker in Jakarta. He is married with 2 children. Eddie lives in a shelter along the river of Ciliwung. Ciliwung is one of the world's most polluted rivers in Indonesia. Every minute, there are over 20,000 waste items that flow into the Ciliwung, many of which could have been recycled. Every day, Eddie wakes up at 6 a.m. He goes out with his cart to pick up recyclable waste from the trash bins and trash dumps around Jakarta. He digs into dumps for plastics, glass bottles, cardboard, and electronic waste. Eddie spends 15 hours a day, sometimes even more, to fill his cart. After Eddie's cart is full, usually around 10 p.m. each day, he goes to a local waste trader who buys recyclable waste and sells it to the middleman. Each day, Eddie collects about 40 kilograms of recyclable waste, and he should make about $8. But the waste traders reject half of the recyclables because the recyclables that Eddie collects are contaminated. They are mixed with food compost, used cooking oils, and household chemicals. This makes the recyclable waste unrecyclable. In the end, less than 50% of the recyclable waste Eddie collects throughout the day is accepted by the waste traders. Eddie also loses money because doesn't always know which waste traders take which waste, and which waste traders offer the best price on each type of waste. For the 15 hours of work and 15 kilometers of walking, Eddie ends up only getting $3 to put food on the table for his family and send his kids to school. And what about the rest of recyclable waste Eddie collects that are rejected by the waste traders? He dumps these recyclables into the landfill. Eddie is a true story. In Southeast Asia alone, there are more than 10 million people like Eddie that pick recyclable waste for a living. These people are the largest source of supply for the recycling industry. However, the current recycling process is inefficient, as over 50% recyclable waste cannot be properly recycled because of contamination. It has poor unit economics with layers of middlemen between the trash pickers and the recyclers. And there is no data visibility on what is recycled. As a result, recyclers struggle to get enough supply. 65% of recycling facility capacity is idle. Trash pickers are not getting paid properly for their hard work. And consumers' brands who have committed to recycling target have no data visibility into how much of their packaging or products is being recycled. Every year, recyclable waste that's worth $250 billion goes into landfills around the world. We are Octopus. We digitize and organize trash pickers who pick up recyclables directly from consumers and deliver these recyclables to the recyclers. All the recyclables are picked up directly from consumers, so they are clean and properly handled, reducing the recycler rejection rate from 48% to less than 1%. We also work with big brands to help track their post-consumer recycling process, identify proper packaging recovery plans, and uncover insights into consumers' behavior. Let me show you how it works. Eddie signs up on the Octopus app and goes through a series of training videos. We show him how to verify, collect, and carry the recyclable waste to avoid contamination. After training is complete, Eddie gets notification that consumers near him have placed orders for recyclable waste collection. Eddie accepts the orders, and Octopus automatically plans the optimal route for him. Our AI-driven route planning enables Eddie to get to each consumer within 30 minutes and sometimes as quick as 3 minutes. The consumer can check out Eddie's profile and also track his location and estimated time of arrival, just like an Uber. After Eddie arrives at the consumer's door, he collects the recyclable waste and records data in his Octopus app. Octopus pays the consumers for the recyclables with in-app points. The consumer can use these points to buy things from Octopus partners, such as Grab and local F&B merchants. When Eddie is done for the day, he checks our app to find out how much each waste trader is paying for each type of item and see which traders our AI recommends. The price discovery is transparent and fair. When Eddie gets to the waste traders, the trader verifies the quality and quantity of what Eddie collects. The rejection rate is less than 1%. Eddie is paid on the spot, either in cash or in Octopus app. Every weekend, Octopus picks up the recyclables from the waste traders. Octopus sorts and weighs the recyclables and pays the traders. Octopus then brings the waste to recyclers we have partnered with, and the recyclers pay Octopus. All data is recorded in Octopus. Brands that subscribe to Octopus can see in real time how much of their packaging has been recycled. As a result, recyclers get more supply. Eddie's income now increased from significantly below minimum wage to significantly above. Brands get data visibility and customer insights analytics, and no recyclable waste ever goes to the landfill. Octopus gets paid by the recyclers for the materials we supply and with the brands for the data we supply to them. The market size of recyclable waste is $23 billion in Southeast Asia. This market is expected to grow to $51 billion by 2027. We are the only end-to-end tech-enabled solution in Southeast Asia to organize and digitize the traditional recycling industry, providing both logistics and data to make recycling much more efficient, profitable, data-driven, and fair for all stakeholders involved. We design a simple, scalable solution for all recycling stakeholders and all types of recyclable waste. We're a mission-driven team with track records. I'm a serial entrepreneur who founded a reverse logistic company after receiving my MBA from Berkeley. I sold the company to the biggest logistic holding company in Indonesia. Our CTO, Nico, was the tech lead of Coca-Cola Amatil. Nico received 7 company recognitions for increasing efficiencies on sales distribution channels. Our CMO, Hamish, closed multi-million deals for an architect firm and is an influencer with 3 million followers. Our chief data officer got his PhD from the Broad Institute run jointly by MIT and Harvard. We are working with 8 local governments in Indonesia. In partnership with the governments, Octopus is providing trash pickers with free mobile phones and helping to send their children to schools. We give the trash pickers a job with training, insurance, and a much higher incomes, a job with stability and pride. That's why trash pickers stick with Octopus. Our retention rate for trash pickers is 95%. We have signed with the biggest packaging and recycling industries in Southeast Asia, including Veolia and Asia Pulp and Paper Sinarmas. And we are also uncovering data insights for multinational consumer brands like Danone Aqua, Hyundai, and P&G, the second largest consumer packaged good company in the world. We are now available in 8 cities. Over 100,000 users are actively using our app to recycle more than 5 million pieces of recyclable waste every week. And our revenue grew more than 2x in the last 7 weeks to hit over $500,000 per month.
So we can say thank you again to Octopus. And now for our next MOX 12 startup, please help me welcome to the stage Boost Capital.
Hi, I'd like to tell you about Chanti, a grocery store owner in Phnom Penh in Cambodia. She has the chance to expand her grocery store into the stall next door, but she doesn't have the money to buy equipment and stock. To raise the money, she has a few choices. She can go talk to the village moneylender. He will give her $500 quickly, but she will have to pay him 10% interest per month. And that is just way too expensive. Or Chanti can go to her local microfinance bank. They will tell her to fill out a long paper application form, which takes her an hour, which is time that her grocery store is closed. Then they will send her home. 2 days later, they'll call her to come back to the bank and to bring her ID and a bunch of other documents. But when Chanti shows up, it turns out she didn't bring the right documents. So she has to go back home and come back the next day. After she submits everything, Chanti waits another 2 days. The bank says to come back again to sign paperwork. Then they send her home. Finally, the day after that, they say that she can come and collect her loan. It took Chanti 9 days to borrow $500 US, and it will cost her 4% interest per month because the bank needs to cover their high overhead. We are Boost Capital, the option Chanti really wants because we are way more affordable and easier than the traditional lender. With Boost Capital, Chanti can apply for a loan digitally, anytime and from anywhere. And there is no barrier to entry, as she doesn't even need to download an extra app. Boost helps people like Chanti apply for loans faster and cheaper. Let me show you how it works. Chanti starts a chat on her phone with one of our banking partners and provides her basic information. The chat dynamically reacts to Chanti's answers in real time. Our tech can process either an uncollateralized or a collateralized loan for Chanti from $100 to $10,000. She uploads soft copies of her ID and proof of income to validate information in her application. Again, no need for an app download. We've built the tech into the chat experience. She consents to have her credit checked with tech that pops up inside the chat. Then Chanti does a video call with a Boost agent to cover KYC requirements. The entire process is just 30 minutes and she receives the money the next day through e-transfer or in cash. When it's time to make a loan repayment, Chanti receives gamified reminders and can repay through e-transfer or in cash. So Chanti saves 20% compared with a traditional bank because our tech saves on operating costs and de-risks loans. And those savings are passed through to customers. And she saves time, almost 2 days of running back and forth and 7 days of waiting. Chanti has expanded her store and it is thriving. Boost enables traditional lenders to become mobile lenders, a $5 billion opportunity in Southeast Asia. Boost's tech-driven platform is better because we help our lending partners become the cloud-based bank that customers want, but that a traditional bank struggles to implement. Our tech makes loans more convenient and lower cost for both our lending partner and the borrower through Boost's automation, digitization, and advanced analytics. My co-founder Gordon and I have built 7 businesses in Southeast Asia between us, with a particular focus on microfinance. Before starting Boost, Gordon worked with 6 top microfinance banks in Southeast Asia on M&A transactions worth an overall $300 million. I grew businesses to a collective $15 million valuation in less than 3 years. We launched in Cambodia in 2019 and have grown to 4 lending partners. And since then, we've driven digital loan applications for over 200,000 borrowers. 50% of our customers return for another of our financial products, and our portfolio at risk is under 2%, in line with traditional lenders. We are happy to share with you that today, Boost Capital has dispersed over $2 million in loans through our tech, and 100% of our customers say their next loan will be digital. They are not going back to brick and mortar. Now it's time to expand. We have a pipeline of 40 new lending partners. We're backed by impact and growth investors, and our tech stack drives lower cost and better convenience.
Thank you again, Boost Capital. Please help me welcome to the stage our next startup from Mox 12, iMotorbike.
Thanks, TR. Hi, I'm Jill. I've landed in Vietnam in 2012, and I was just super impressed with the millions of little motorbikes running around all the cities across Ho Chi Minh. So I had the driver when I arrived, but I couldn't really get anywhere. There was a massive traffic constantly. So I decided I should just get a motorbike. So I decided to ask around my colleagues, where should I get a bike from? They all said the same, just go to a dealer. So here we are, we went to a dealer. The image wasn't the best. There was a shorter stock offer, lack of documents, changed kilometers and hack odometers in most of the motorbikes, no maintenance records whatsoever. And to be honest, the dealers seemed quite scammy, a great majority of them. So at that stage, I just decided I'm going to rent a motorbike. But the reality is there are millions and millions of people that need bikes for their daily commute, and they just can't afford the expensive premium of renting a motorbike. So that's when iMotorbike came about, with the thought of bringing clarity, trust, transparency to buying and selling motorbikes across Southeast Asia. So what we do is, in a very visual way, you have the used motorcycle market on the right side. And then we go to the secondhand market, we inspect and purchase the motorbikes from it, doing 170 inspection points. We get them to us, we recondition and make them safe. So we guarantee oil, brakes, tires, all is in condition and up to our standards to resell it to the consumer again with a 6 days return policy, 100% money back guaranteed, TNCs applied, and a 6 months warranty and to the end consumer. If the bike is not really up to our most premium standards to carry our brand, we'll pass it on to the 5,000 dealer network that we have under a bidding platform, and then they will sell them themselves to the secondhand market. So when we sell to consumers, the user journey is very simple. They come to our website, they basically scroll down to our platform until they find the product they are looking for. They go through the infamous amount of images in extremely detail. So obviously any secondhand product might have some scratches and dents here and there. We make sure we show them all to the consumer so that he builds the trust on us. We give them the full details of the motorbike, the description, the specs, in the sense what it comes with it. We show them recommended products on brand, model, and pricing standards. And then when they chose what they want, they can just quickly press WhatsApp. They have a pre-filled message, just a distance of a click to get the message across to us, or they can just press our map on the right side, and they will be able to find our store's location where they can physically come to visit and see motorbike that they would like to purchase. If they're not happy yet and they want to get some questions sorted beforehand, they can just call us up and guarantee they get it sorted before they move out of their houses. So when we buy from customers, the customers can come to our platform. They see a form straight on the homepage where they are prompted and asked to fill up their brand, motorbike brand and model. And once that is done, we ask them their location because it's extremely important logistic-wise. And they're asked to fill up their phone number, and they'll get OTP verified. So we guarantee it's not a bot, right? So upon this done, we receive the message on our side. We'll call them up. We book a virtual inspection where we kind of get to know the seller, the bike, and kind of arrange a price point. Once that is done, we invite him to visit us physically, and we inspect the bike with a certified mechanic, 170 points, and we offer money and name change on the spot. So there's 550 million total registered motorcycles in South Asia. And the TAM that we're addressing is about 50 billion worth, purely in the markets that we're talking about, Malaysia, Vietnam, the markets we operate today. This business model has built a tremendous amount of unicorns. Mainly, as you can see, there are car businesses. You're probably familiar with most of them. Cars24 out of India, the 3.3 billion worth of a business, just opened the Bikes24, but solely focused in India. There's also Creator focused in India. And then pretty much fully motorbike and solely motorbike focused, you have us, and we are multi-market as well. So I've been running businesses both in Portugal, Europe, where I'm originally from, as well as Southeast Asia, Vietnam 4 years, and then Malaysia another 6. I've been part of Lazada, Shopback, Peugeot. Shopback is where I was very fortunate to meet my co-founder, Charmin, who was also a co-founder of Shop back then and joined us to head marketing and expansion and growth. The average bike price that we sell is about 2,000 US, and the margin is about 140. The margins are on a squeeze version, means we're in the growth phase. And as we learn, as we grow the market share capability of our business, we will be able to harvest roughly 2 to 3x what is present today. So we've grown accumulated transactions from 5 to 350, being a 70x in solely 7 months. January alone, we did 100 transactions. We grew annualized revenue from 38K to 1.1 million, a 29x growth, which is we are quite proud of.
Okay, thank you again, iMotorbike. Please help me welcome to the stage our next startup from MOX 12, digitization.
Thanks, Tia. Meet Ali. He's a 30 years old textile trader. He lives in Faisalabad, the number 3 largest city in Pakistan, where he rents a small shop at a textile wholesale market. His customers are small retailers spread all across the city. 90% of Ali's customers buy on credit. And like all small business owners in Pakistan, Ali records his business transactions with pen and paper. Every single night, Ali spent hours copying his records from his bill book into a ledger book, where he records what he's owed. But the problem is, almost every day, Ali's cash in hand doesn't match the reconciled record of his books. And Ali has no idea where the money went or why it's missing. This is because during the day, Ali conducts his cash and credit transactions with pen and paper, and when things get busy, transactions are overlooked. There are no digital records, no receipts. Ali is losing money on a daily basis. Another major problem Ali faces is late payments from his customers. So he has to make business trips to visit his customer, the small retailers, to recover the money that his customers owe him. And when he does that, he has to close his shop, meaning lost sales. But if his customers have different records of how much they owe Ali, Ali has no way to tell which record is right. And the worst part is, with all these cash flow problems, Ali is unable to pay its suppliers on time. And because he has to buy from his suppliers on credit too, they charge him 25% higher prices. In Pakistan, 25 million small business owners are in the same dilemma as Ali. Many of them are not able to collect the money for the goods and services they provide because they conduct over 90% of their transactions on credit. They are losing money every day, primarily due to the difficulties in tracking the transactions and collecting them. We are DigiKhata. We enable small business owners like Ali to digitize his transactions and recover his receivables fast. With DigiKhata, Ali can now better manage his customer credit and negotiate better prices with his suppliers. Let me quickly walk you through it. Ali can create an account with his mobile number. DigiKhata verifies it by sending him an OTP. And his DigiKhata account is created. He can create his customer ledgers from his contacts, presses the red button to record the credit, taps the green button when he collects the payments. He enters the amount, add any details, attaches any supporting documents, and save the transaction. An automated SMS is sent to the customer notifying him about the transaction details. Ali can set collection dates against his customers, and DigiKhata sent free SMS reminders to his customers for timely payments. DigiKhata helped Ali to recover customer credit 3 times faster. And for that, Ali don't have to travel to customers' places and keep his shop open and make more sales. With improved cash flows, Ali can now better manage his suppliers and negotiate better prices. This helped Ali improve his profitability by up to 50%. Ali can do more with DigiKhata. He can download and share reports that give him analytics and insights of his business on the go, which helped him manage his cash flow and inventory in a much more efficient way. Ali can also create digital storefronts instantaneously and sell to customers across Pakistan with DigiKhata. He can start selling new digital products like mobile top-ups. DigiKhata takes a small cut from the sales of these products. There are 25 million small and medium businesses in Pakistan. They power 40% of its economy. We believe there is over $50 billion worth of unmet financing needs of these small businesses today. We have a very cost-effective user acquisition.
we spend half of what our competition spend to acquire a customer. Our engagement post sign-up is higher, making DigiKhata the #1 Khata book in Pakistan by monthly active users. We are also differentiated as we offer comprehensive suite of tools tailored for these small businesses. We are an experienced team who automated and scaled businesses across the globe, including Emirates, MTN, and Telenor. I audited and advised over 25 multi-million-dollar businesses while I was with PwC. With MTN, I set up a shared service center in Johannesburg that cuts down the processing cost of 22 opcos around Africa and MENA region by 80%. I served as the youngest director in Emirates, managing $1 billion in debt and reducing its cost to half in less than a year. My co-founder Bilal has worked for some of the world's leading telcos and advisory companies and banks. He supervised teams responsible to ensure integrity of financial accounting, corporate governance, and revenue assurance, which saved millions across various assignments. DigiKhata provides a full ecosystem of financial, distribution, and e-commerce solution to business owners on our platform. We have signed partnerships with all the telcos in Pakistan, leading logistic providers, and financial institutions. HPL is Pakistan's largest bank, and EasyPaisa is Pakistan's largest electronic money wallet. Our monthly active users, the business owners on our platform, has grown 10 times in the last 12 months, making DigiKhata the fastest growing SaaS company in Pakistan. In January, we have crossed 1 million active business owners on DigiKhata. And the transaction these business owners record on our platform has grown 40% over the last 2 months to hit $100 million daily. In 2021 alone, over $20 billion is recorded in unique transactions, which counts to around 7% of this nation's economy. We are Pakistan's largest network of businesses today, and our merchants have further enhanced our reach to 15 million of their customers and suppliers.
Thank you so much again, DigiKhata. Please help me welcome to the stage our next startup for MOX 12, Caker.
Meet Akbar. He's a 24-year-old living in Karachi, Pakistan. He's working the startup life, working 60-hour work weeks. He's driving home from work one day when he gets into a serious car accident. His car is severely damaged. He doesn't know what to do with it in the moment, so he searches a towing service on Google and they drop the car at his uncle's place while he figured out what to do. Akbar asks his family and friends if they know of a good mechanic who can fix his car, something which takes another 5 days. They recommend some shops, but they also gave him some warnings. Purchase any parts yourself, as mechanics may charge you for an expensive component, but install a cheap one instead. And make sure there are other workshops near your mechanic, as not everyone can fix every issue. He spoke to 5 or 6 before settling on one conveniently located near his office so he could keep tabs on the progress. The workshop gave him a list of parts scribbled unintelligibly on a piece of paper. He had been warned to do this part himself, so he went to central informal markets to do it. There was a lot of back and forth involved. There were multiple brands of the same part available in the market. And something which costs $5 also had a $15 variant available. He had to decide what to buy to balance his quality and his budget. Also, every time he would bring some parts to the mechanic would reject some because they weren't the right fit. There was something that he had never mentioned before. There was a lot more back and forth. It took 6 weeks until everything was in place for the work to start. Now, to get an update, Akbar had to travel during his lunch hour by rickshaw to see the mechanic. He would pay for the work completed, buy any additional parts required, and then return back to work. This entire process took another 4 weeks. And when Akbar finally went to pick up his car, his newly installed windscreen had a crack in it, and the car was rattling like it had never before. As Akbar decided that getting the windscreen replaced is not worth the hassle. And the mechanic assured him that the rattling would eventually settle down. The rattling never stopped, and he ended up selling the car at almost half its market value. Hi, I'm Hasnain Akbar, and this is my story. And we created OKCar to make sure no one ever has to go through this complicated procedure to get their car fixed. Instead, they come to OKCar, which is a digital platform connecting customers, mechanics, and part suppliers in a fast-growing aftermarket industry. Let me show you how it works. We start with our in-house technicians that we bring onto our platform. They go through regular training and certification. We also bring on board small and medium workshops and part suppliers, which are sent bidding offers for each order. Now, let's say you're a customer who gets into a car accident. All you have to do is come onto the app and book a diagnosis order. This order is going to fall onto a proprietary ERP called the OK Core, which assigns a guru to the order. Gurus can keep a track of all their orders on their Guru app. Once the guru reaches your location, they will perform a comprehensive check and report back to the core. Workshops and part suppliers enter their bidding on their modules. OK Core is built on a repository of part, engines, and vehicles, which allows us to efficiently generate the final quotation at the best prices. Within 3 hours, once you approve, we come to your location and complete all tasks required while you focus on important things. Now, the aftermarket industry in Pakistan has been growing steadily 10% year on year for the last 14 years. It is currently at $3 billion. OKCar provides repairs at the best prices in the market, while providing the end-to-end convenience and transparency of a manufacturer's own workshop. I'm Hasnain, and I worked at Pakistan's leading startups where I led cross-functional projects which focused on optimizing operations. At Careem, Pakistan's leading ride-share and delivery app, which has closed over $750 million in funding, I helped increase trip volume by 2x in 6 months. And I also drove a 30% reduction in fleet incentives. At Daraz, Pakistan's #1 e-commerce platform, backed by Rocket Internet and acquired by Alibaba, I led the projects to reduce the logistics cost across 5 businesses in 5 countries. My co-founder Nashid belongs to a family which has been trading auto parts for the last 60 years. His work with his family business has given him an acute insight into the industry, which serves as the backbone of OKCar. In addition to that, he also set up arguably Pakistan's first just-in-time logistics startup, which he later exited. He led the launch of the bikes vertical across 12 cities of Pakistan. Our CTO Asjad has led projects from Pakistan to New Zealand for companies such as Roadrunner and private government ministries like the Education Department of Sindh. He's built 6 products which have over 1 million users. In the year since we have launched, we have over 50 part wholesalers on the OKCar platform, and also 100 workshops, all operating on a revenue sharing model. As a result, we have been able to close over 2,500 paying customers as car owners. And in addition to that, we also have B2B clients, including the top 5 insurance providers of Pakistan, the largest fleet provider of Pakistan, as well as several high-profile startups such as Careem and Car First. We have reached $50,000 in monthly revenue, growing 2x in the last 2 months alone.
All right, great. So thank you again, OKCar. And without further ado, let me welcome our next startup to the stage from MOX 12, High Street.
So Ayman lives in a tier 2 city in Pakistan called Sialkot. She works in an office. She loves dressing up. She's up to date on all the latest fashions. Now, social media has broken down barriers. So Ayman knows what's trending in fashion all across the world. She's heard great things online about a cosmetic, Gravity Mud from Glam Glow, but she can't find that in the local markets. She does, however, find a local whitening cream, but she is bitterly disappointed by the quality. Next, she tries to find a similar, higher quality product online. She makes the purchase and the site says she will receive it within 3 days. 7 days later, she finally receives the product. She tries the product, but there's something wrong with it. It's a fake. It gives her a rash and she has to visit her dermatologist. Now, frustrated with local e-commerce options, she now decides to purchase a product online direct from overseas. The site says the delivery will take 2 weeks. But of course, the price is also significantly higher than the products in the local market. A month later, the courier calls her and notifies her that the product has been received. But in order to receive it, she must pay a customs duty fee, which effectively doubles the already high price. Now, Ayman and millions of other women in Pakistan shared this miserable experience. We are high street. We make it seamless for millions of women in Pakistan to buy authentic, reasonably priced health and beauty products with fast delivery times from over 100 brands. So let me show you how it all works. High Street gets its supply from 3 sources to guarantee authenticity. We sign vetted wholesalers where we buy stock from them and hold it at a third-party logistics warehouse to ensure instant delivery. We also sign authorized resellers who allocate inventory or drop ship it to our warehouse. So this has no inventory holding cost or risk of dead stock. Finally, we have relationships with international sellers where we self-import via sea cargo with low customs duty fees because of bulk shipments. This does have long lead times, but tremendous margins. So these products are procured and consolidated at a third-party logistics warehouse where all products are labeled, ready for picking, packing, and immediate delivery to our customers. So Ayman's come to High Street site, browsing for a product she likes. Now, these products are hard to get a hold of in Pakistan. So spoiled by choice, she's already found what she likes. Next, she adds it to her cart. She adds her shipping details, chooses her payment method, either a digital wallet, a credit card, a debit card, a buy now, pay later facility, or cash on delivery. She clicks confirm, and at this point, High Street's fulfillment process begins. We offer a 3-day nationwide free delivery. So Pakistan's health, beauty, and fashion market is growing at 10% year on year and is set to hit $2 billion in 2025. We stand apart from the industry because we provide reasonable prices for authentic products and provide a great customer experience with fast nationwide delivery. So if Ayman is looking for a Huda palette, her options are clear. She can get one locally for $3 US, but that would be a fake. She can buy it online from the official international store and receive it a month later and pay $60 US because of the 100% customs duty on one-off shipments, or she can purchase from High Street, guaranteed to be authentic for $25 and receive it within 3 days. Allow me to introduce you to our founders. Ali Ayaz drives revenue generation, having managed extensive budgets with key Pakistani e-commerce companies such as Utopia, where he helped them hit #1 in Pakistan in all the categories he managed. Humayun Sabzwari runs supply chain and brand partnerships. He has first-hand operational logistics experience from his time consulting at a logistics terminal at one of Karachi's busiest ports. He helped save them over $500,000 of lost revenue through process optimizations in just 3 short months. And finally, there's me. My name is Babar. I'm the co-founder and CEO at High Street. I lead our brand ambassador program and our customer advocacy. I have experience as a market manager for a Fortune 100 MNC in Vancouver, British Columbia. I doubled revenues, scaled teams, and excelled in 3 new roles in 2 years prior to moving back to Pakistan to launch High Street with my co-founders. Now, High Street is bootstrapped. We haven't raised any money, and we have been profitable since day one. We launched with an initial investment of just $5,000 US. We've attained a 45% gross margin with a 20% EBITDA margin, which we've been able to reinvest as part of our profits to grow into one of the leaders in the health and beauty space in Pakistan. In 2021, we hit $350,000 in GMV. Last month, we exceeded $50,000 for the month.
So thank you once again, High Street. And please help me welcome to the stage our next startup from MOX 12, Agrify.
Meet Ram. Ram is a farmer living in a village near Chennai, which is one of the 4 largest metros in India. Ram owns 1 hectare of land and he grows peanuts. To grow peanuts, Ram needs seeds, fertilizer, and labor, all of which cost him $2,000 for 1 crop cycle. But Ram is out of money and Ram needs to borrow this sum. So Ram's first option is to go to a bank. But a bank will ask Ram for bank statements and a credit history, neither of which Ram has. In addition to that, the bank will take up to 3 months to collect and validate Ram's land records and his background information. And if Ram has to wait for 3 months to get a loan to buy seeds and fertilizers, he will miss his cropping cycle. And so Ram opts for option 2, where he goes to an agricultural retailer who sells him seeds, inputs, and fertilizers. Because they know Ram for about 15 years, they will not need any documentation to lend this $2,000 to Ram. But there's a catch. Ram will have to deal with a minimum of 5 such retailers to come up with the $2,000 that he needs for his crop cycle. And he has to pay 50% interest on this sum, which is most of his profit in a good year. In addition to that, if Ram borrows from these retailers, he is forced to buy his seeds and fertilizers from them, even if they are of inferior quality. Ram is stuck, and he's been stuck in this loop year after year. And there are 140 million farmers in India. More than half of these farmers are like Ram, who can never get a loan from a bank. They have to go to these retailers for their credit needs year after year and have to pay more than 50% interest rate annually as compared to the 7% interest that they can get from a bank. We are Agrify. We solve the problem for farmers like Ram by helping them create a digital credit history, which is what a bank needs to provide them with loans. And by getting these loans, they're able to purchase the seeds and inputs and fertilizers that they need for the crop cycle. We also help them connect to buyers for their crops. Now let's see how Agrify works. So Ram has to just download the app from the Play Store, put down his number, get an OTP to log into the app, and he just has to enter his name and PIN code to start using the mobile app. Once he's inside the app, he can start keeping track of all his transactions with other farmers, retailers for seeds, inputs, and fertilizers. And this in turn creates the credit history that is required by a bank to consider him for a loan. And at the beginning of the crop cycle, if he needs a crop loan, he just has to enter what kind of loan he wants, his crop details, land records, and press on enter to submit a loan application for the Agrify team. Within 3 days, the Agrify team will call Ram and confirm the details that he has submitted on the app, including his land records, bank records, and his loan details, so that they can create a loan application virtually. Once these details are compiled, we use our proprietary algorithm to create an Agrify credit score, which is very vital for a lender to consider giving credit to Ram. We combine this credit score with his virtual loan application form and share it with our lender. And if approved, Ram will get a loan at 7% interest rate rather than the 50% interest rate. And as compared to the 3 months that he would take to get a confirmation on whether he'll get a loan, now Ram can get this loan in less than a week. we get a 7% sourcing fee from the bank and a 1% advisory fee from farmers. And as we add more features to our app, such as crop sale insurance, we will have multiple touch points to earn transactional fees. And as Ram starts using our mobile app to keep track of his daily transactions, as well as the loan repayment, his Agrify credit score improves. And this in turn will help him get a loan for each season. The size of agri-credit in India is $180 billion, growing at 10% annually. And the way we differentiate ourselves from the other players is our focus on digitizing the entire journey, thereby reducing the time taken from a loan application to dispersal and making it transparent for all the stakeholders. And because of the fact that we collect transactional data, we create the critical Agrify credit score, which lowers default risk for the lenders, thereby making it easier for them to lend to the farmer. We are an experienced team. I am Abhilash, the founder and CEO. My first company got acquired in 2014 for $18 million in cash. My second company, we created an Uber for farm mechanization platform, which was grossing $3 million annual revenue run rate in the 4th year of operations. Mithilesh, our co-founder, spent 9 years at Cropin, India's largest enterprise tech SaaS startup in the agri-tech space, helping it expand to more than 35 countries. Raghu started his career with Precision Agriculture for Development under Nobel laureate Michael Kramer. And he was the first lead engineer at Cropin, building over 12 different agri-tech products. We have signed with some of the biggest lenders in India. We have signed up with ICICI Bank, the largest private sector lender, and State Bank, the largest public sector lender. We have grossed over 20,000 downloads of our mobile app in less than 11 weeks after launch, with a customer acquisition cost of less than 10 cents. It's still early days, but we are growing at more than 50% week on week. And we have more than 44,000 loan applications put within our app by farmers. And we have driven more than $100,000 in loans so far.
Thank you once again, Agrify. Next up, please help me welcome to the stage our next startup for MOX 12, Y Jungle.
Hi, everyone. I would like you to meet Rahul. He lives in Delhi, the capital city of India. He runs a small software development firm with 100 people on his team. He is worried about cyber security. Last month, he had a bad experience. One of his employees downloaded a piece of software that turned out to be a malware, and it encrypted all his customers' confidential data. The attacker asked Rahul to pay $25,000 to unlock the data. Rahul had no option but to pay. Otherwise, he will have to shut down his company. And if next time his business gets hacked, they will not be able to survive. Rahul wants cyber protection for his business, and he looked around the market for a solution, but found that there are a lot of products necessary to tackle different attacks, like ransomware, phishing, DDoS, and many, many more. He could not figure out which product to pick. So he took advice from an IT consultant that told him he will need to buy multiple products to get overall protection. Each of these products are complicated to integrate and configure. Even worse, each of the products requires a big upfront investment. After an exhausted day, Rahul gave up the idea of overall cyber protection as he could not find something quick and easy he was hoping for. He bought 1 or 2 products, but that leaves him unprotected and exposed to risk. And Rahul isn't alone. Across the globe, There are 200 million small and mid-market businesses that want overall cyber protection but can't avail it. That is why we launched YJungle. We offer inexpensive unified cybersecurity platform, giving small and mid-market companies an overall protection through a single window. Let me show you how it works. Rahul learns about YJungle from a webinar organized by one of our channel partners. Rahul finds exactly what he needed. He can have his team to set up and configure the system themselves with the support of one of our customer success manager, or he can pay to one of our channel partner who can take care of everything. Rahul pays an annual fee depending upon the number of devices he has in his network, the volume of traffic that needs to be protected, and the cybersecurity policies he wants to implement. After the initial setup is done, Rahul's tech team can take care of everything by themselves. Through a single window, they can define policies and add new devices. Moreover, they can monitor what is happening, including the suspicious activity by users and external softwares. Rahul can relax now and sleep well again. SMBs spend on an average $2,000 to $20,000 in cyber protection every year. There are 200 million SMBs globally, and you will not believe that only 3% of them have overall protection. In India alone, we have 6 million small and mid-market businesses that are the potential customers of YJungle. YJungle stands apart due to its comprehensive product, specialized for small and mid-market businesses. I and Praveen are the two co-founders of YJungle. Combinedly, we have 16 plus years of experience in cybersecurity. Before YJungle, we have been working at Samsung Electronics and Safe Security. I have been the youngest recipient of Forbes Asia 30 under 30 in enterprise technology category. Together, we were the first to launch the completely free Wi-Fi in India, which we scaled to 100,000 users. We have 275 plus paying customers, and our product is working so well in these small and mid-market organizations that small offices of MNCs are also adopting it. We have received multiple awards that define the quality of our product. We have protected 500,000 devices and have mitigated over 3 billion cyber threats. We have over 70 active channel partners, which introduce us to tens of thousands of their customers. And these partners are already driving 80% of our revenue, which allows us to scale faster. Our total sales last year stood at $1 million. And quarter on quarter, we are growing by 40%. I'm glad to say that we are bootstrapped and have been profitable from the first year.
So thank you again, YJungle. Next up, please help me welcome our next startup from MOX 12, Zaskit.
Hi everyone. I would like to introduce you to Raj. Raj comes from Vijayawada, a T2 city with 2 million population in southern part of India. Raj works as a manager in a small factory, and he is married and have 2 kids. And he lives in a 2-bedroom house with a very small kitchen. Like most of the middle class income people, buying groceries is a painful chore for Raj. Like most of his neighborhood stores are simply out of stock. As a result, Raj has to visit multiple stores to buy what he needs. Between each store, he needs to fight through traffic. Raj almost spends 4 hours of his time just to buy groceries in a week. Fortunately, one day Raj finds out about online supermarket and he's super excited. Boom, until he finds out minimum order value is $8 in the online supermarket. But Raj usually buys $2 worth of groceries multiple times in a month. Remember, Raj comes from middle class family and he doesn't have enough kitchen space to support bulk buying. Clearly, Raj is unhappy as none of the solutions does solve Raj grocery shopping problems. We are Jasket. We onboard network of community agents like mom and pop shops, homemakers, and part-time workers to bring fresh produce in an inexpensive way. As a result, we have 60% low delivery cost when compared to our competitors. We are similar to Pinduoduo. Pinduoduo is a $30 billion Chinese company who serve farm fresh produce to Chinese middle class people. Let me show you how we do it in India. One of the community agents is Raj's friend, and he shares Jasket app invite link via WhatsApp. Raj then clicks on that link and downloads Jasket online grocery app. And he signs in via Truecaller. He no need to give any details. And he then adds a couple of vegetables and fruits for his next 2-day needs. And his purchase value is $2. And he chooses offline payment and places order in Jasket. The entire process took just 2 minutes for Raj to place order in Jasket. On the other hand, we have network of farmers where we bring fresh produce every day to our distribution hub. The produce that came to the distribution hub will go to rigorous process of sorting, grading, and packing. And finally, all the items will be picked by our picker. And we have a 3-step verification process to ensure there are no missing items. Then the orders are packed via trucks to community agents. Then community agents will distribute in the morning before 11 a.m. The produce that came 16 hours back to our distribution hub now is at Raj doorstep. That's how we do farm to table in just 16 hours. The market potential is quite huge. Raj is just one of the 300 million middle class consumers who is waiting to do grocery online. Social commerce, which is just $1.5 billion market today, would likely to go to $20 billion market in next 5 years, according to Sequoia and beyond. Jasket clearly sets apart from others in terms of low minimum order value and low customer acquisition cost. As we do everything via community agents. Our community agents not only do delivery for us, they also bring customers to our platform. As a result, we have 50% low customer acquisition cost when compared to our competitors. We know how to do this from past experience. We are a team of 3 passionate founders. Myself worked in Amazon and Swiggy. My Swiggy experience launched Swiggy in 10 different cities and took revenue to $5 million. Other CEO Dinesh worked for second biggest lubricant product, Mac, and he launched Mac in 3 southern states and took operation revenue from $25 million to $50 million. Another founder, Satya, worked marketing campaigns for hundreds of brands like McDonald's, Directly, while working in leading marketing agency, MediaMint. We launched our services in Vijayawada and we have 30% month-on-month growth. We already touched $40,000 monthly sales. We are second biggest online supermarket in the city that we are operating. We are close to operational break-even.
Again, thank you so much, Shri and Zasket. Next up, please help me welcome to the stage our next startup from MOX 12, Stitched.
Hello, everybody. I would like to introduce Neha.
She's a 20-year-old college student from Rewa, Madhya Pradesh, a tier 3 town in India. Like most Gen Z and millennials in India, she's super active on social media and she loves fashion. But like everyone else, she faces two big problems. The first problem is that there is no such thing as affordable fashion. The prices of online fashion brands and even non-branded fashion sold on marketplaces are way too expensive for Neha. They cost much more than her monthly pocket money. And less expensive fashion sold on physical retail stores are dull and low quality. The second problem is that Neha can't access the latest fashion designs popular on social media. Indian fashion brands launch just 2 seasons per year. But there are new fashion trends launching every day on social. The latest fashions only seem to become available months after the trend has come and gone. Neha feels like she looks almost the same, whether she's going for her college classes, out for lunch, on a Tinder date, or for a birthday party. This impacts her self-confidence. She feels she isn't able to update and upgrade her wardrobe fast enough. We are Stitched, a sustainable global youth fashion brand that enables people like Neha to access new fashions on a daily basis at a fraction of a cost compared to any other brand. Enabled by our real-time design and production on demand technology, leveraging a network of gig working tailors, which is extremely scalable, low cost, and eliminates inventory and reduces returns. Let me show you how it works. Neha visits our website or app. She checks out our designs. Stitched updates designs every day based on the latest in fashion blogs, what's trending on social media, and the latest fashions from across the world. We even launch designs based on customers' requests and feedbacks. Neha sees fresh and new styles every day. She chooses the design she wants. She chooses her size, and she can even opt for size customizations if needed. She then places an order. In the backend, our algorithm has already broken down all our designs to a predefined set of pattern blocks. Our platform divides the clothing production into a series of easy to execute batch jobs. Our large network of tailors can choose the amount of stitching work that they want to do. They pick up the pre-cut materials from our local hub and deliver back the stitched clothing to the hub when they are done. Our QC manager inspects each finished product before they are shipped through one of our 10 logistics partners to Neha. Our best-in-class order management dashboard tracks shipments real-time from order placement to confirmation to delivery partner allocation to delivery, including tracking deliveries that don't make it to their destination, as well as managing returns, all in one single dashboard. We are focused on the India inexpensive value e-commerce market with $20 billion US per year and growing quickly. We are superior to our competitors because we deliver the latest in fashion at a much lower cost, and our clothing production technology and gig working tailor network enable us to turn around orders in 48 hours with zero warehouse, zero inventory, and low returns. My name is Shomaji, and along with my co-founder Durga, we founded Stitched. We are 2006 graduates from IIT Kharagpur, one of the top tech universities in India. Durga was previously with Amazon India and set up 24 fulfillment centers across the country. Before that, he was with ITC, where he drove supply chain efficiency improvement of 25% and implemented Lean Six Sigma processes across 5 factories. He did his MBA at ISB, the #1 ranked business school in India. I was previously the head of marketing for Jabong, the rocket internet e-commerce platform in India, where my team was instrumental in bringing the company to profitability. I was also the head of e-commerce for Capillary Technologies, where I helped drive month-on-month growth of as high as 30% for some of our partner brands. We are focused on serving the next 300 million Indian consumers who are shopping for affordable fashion online.
Stitch stands apart. More than 75% of our orders are from tier 2, 3, 4, and 5 towns. Only 25% of our orders come from tier 1 cities. Versus other brands, where 80% of their orders come from only the top 10 cities in India. Our customer acquisition cost is low, and we have a 6x ROI on our marketing spends. And our revenues are growing 25% month on month. I'm very happy to announce today that our monthly revenue has reached $250,000 US, and our gross margins are at 66%.
Okay, thank you so much. All right, so thank you to our live public audience again for taking the time to learn more about our MOX 12 startups and their amazing founders. This ends our public stream on Facebook, YouTube, and in person in Taipei, Shanghai, and Kuala Lumpur.